a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Markets on edge, global bonds selling off after a meltdown in Japanese sovereign debt on Takaichi's election pitch. This all as President Trump's tariff threats add to market unease as world leaders gather in Davos. Plus, Treasury Secretary Bessent in Davos says the president could announce his Fed chair pick as soon as next week. But take a look at this market action because it is simply stunning today. We have futures pointed very much lower a few hours before the Tuesday session. Remember, it was a long weekend in the United States. But let's take a look at the bond picture because that's where it's really obvious that there's something going on in this market. This market is very unsettled. That 10-year yield is about to touch 430. Remember, we've been in a 410 to 420 range for the longest time. We're back at levels that we saw last August, September. That 30-year yield is at 493.35 and the 2-10 spread now is back at 70 basis points. It's been many weeks since we've seen that kind of a spread. We were all the way down to 60 and below just in recent days. Let's take a look at gold because we're seeing that above $4,700 an ounce. Silver also at a record at 95, and obviously crude not really paying too much attention. The VIX, I want to point out, is above 20. We're going to get to all the reasons why this hour. First though, let's get to some individual market movers across to London and Chloe Melly. Chloe.
Good morning, Bonnie. It looks like the U.S. stock market is going to follow in the footsteps of this global general sell-off there. And we are seeing some of those big names in the U.S. down in the red this morning. In particular, Western Digital down almost 6% in pre-market trading as we are seeing Trump's tariff threats really spook investors this morning, and also those escalating tensions over Greenland. However, on the other hand, this uncertainty, this tension is good news for miners, and miners are in the green this morning as we are seeing this rush towards safe havens really drive gold and silver, and so we are seeing miners in the green. And finally, we are seeing also a big move in wrapped therapeutics this morning after the British drug maker GSK agreed to buy the company in a deal that is valued at $2.2 billion, and so this will give GSK access to wrapped therapeutics portfolio of treatments for inflammatory diseases, and we are seeing a huge move there, more than 60% in pre-market trading.
Chloe, thank you so much. Chloe Melly there. And coming up this hour, we're live from Davos with Filippo Gori, JPMorgan co-head of global banking, and ECB Governing Council member Francois Villeroy. That's later this hour. But first, on this market, stocks selling off across the Atlantic on a standoff over Greenland. Global bonds also sliding following a heavy rout in Japan. Let's bring in Bloomberg M Live's Skylar Montgomery-Koning for more. Skylar, I guess this started developing in Japan, but it's a whole confluence of events, right? What would you say is behind the Treasury sell-off today?
Yeah, I mean, I think certainly the move there is concentrated around Japan. Now, the issue with Japan is you're having an election come to the fore where the idea is if the ruling party gets more power, so they strengthen their mandate, then they'll do more fiscal spending. Now, debt to GDP in Japan is already the highest across G10. You also have an issue with the duration mismatch in terms of that huge amount of debt is being funded by Japanese investors owning, and Japanese government as well, owning risky assets abroad. So the worry is as that yield rises, it becomes increasingly fiscally unsustainable. And it brings to the fore questions around debt sustainability globally. So it's not just Japan, it's an issue. As you say, US Treasuries, it's an issue. European government bonds, it's an issue. And I think particularly for US Treasuries, what we need to think about is this idea that you've had a structurally compressed term premium kind of in the 2010s because you had unusually easy monetary policy, QE, very predictable monetary policy as well. And so we're kind of moving structurally higher because we have a more uncertain economic environment, we have greater US Treasury supply, and you also have a flipping bond equity correlation, which means bonds aren't as good a hedge as they used to be. And so you get kind of triggers elsewhere in the world, but it's certainly also a US motivated event in terms of you need a structurally higher term premia and a structurally higher yield.
Exactly. Skylar, thank you so much for all of that context. Skylar Montgomery-Koning there, and you saw the yen move today. One full big figure from 158.60 right down to where it is now, 157.72. All right, let's go to Davos, Switzerland, where Bloomberg's Francine Lacroix is standing by. Francine.
Thank you so much, Vonnie. I'm delighted to be joined by Filippo Gori of JPMorgan. Filippo, thank you for joining us. There's a lot going on. I feel like the world is descending on Davos. There's one show in town, and that's President Trump. I want to ask you about JPMorgan and how you see the year ahead, but how do you see clients behaving or behaving differently given all these new threats on trade?
Thank you very much for having me, Francine. So, as I was saying, I've just finishing a tour that is lasting 3 weeks across Europe and the Middle East and now in Switzerland. And it's definitely interesting, the fact that as we were touring the region, no one asked any question around trade or tariffs. It was one of the main takeaways that we shared with Jamie too, that it seemed that we have moved on and people just want to get on with the business and run the companies and do what they have to do and not have to worry too much about tariffs. Now, they might come back in the spotlight, but I felt there was a more sanguine feeling that it is what it is. Let's just get on with life.
How are you and how is JPMorgan preparing for another big year? Are you hiring more bankers? What areas are you focusing on?
So absolutely. So if you look at what 2025 was from an investment banking standpoint, if we cover that point for a second, it was the second best year in the history from a deal-making standpoint. Notwithstanding that you had 2 months, April and with Liberation Day and October with the government shutdowns where activities did slow down. So the momentum though that you had for the last, I would say, quarter, last 4 months of the year, it definitely seems to be carry on into 2026. And this could be one of the best, if not the best, year for deal making. This is for a variety, I think, of different reasons. Clients are kind of looking around, they realize that financing costs are still exceptionally cheap. Yeah. There is definitely an enormous backlog of transactions that should have happened last year, they're probably moving into this year. The large mega deals are coming back, and therefore we feel that this will be a year important for both IPOs. Probably we're going to see much more. We were expecting those in 2025, but we feel that now 26 is coming back, and M&A too. So yes, we are hiring across the border, in all the sectors, in all the locations.
But Filippo, is there something that could slow down the momentum?
Probably, I would say 3 things when you speak to clients. The first is what you mentioned at the beginning, geopolitical. The geopolitical winds have been blowing for a long time. At times they blow in other direction, at times they blow in the opposite direction, so people got used to it. Clearly, an escalation could bring a slowdown in that sense. Then there is a lingering fear that you perceive here and there around inflation coming back, or potentially the end of this fantastic credit cycle, which we have had now for the past 15 years or so, and therefore conditions that could materially change under certain scenario, and a lingering fear that, inflation could come back and so on and so forth. And then there is all the usual question that you might have around AI. At what point, all the considerations around valuations, productivity, job losses, and so on and so forth. But barring all of these, which are a big considerations, I still feel the clients, the perception that I had in these 2.5 weeks going around Europe is that people want to get on with their businesses.
I think it's 1 year to the day since President Trump got inaugurated. How are clients feeling about the administration? I know leaders here, European leaders, are under extreme stress. Clients may be different.
I think definitely clients around the world are watching the US economy with a degree at times of envy. Yeah. So how can we be part of that fantastic engine of growth that is the US economy? And from a US standpoint, clearly the perception that the regulation and other things that can impact growth is bringing clients the idea, let's dare to do what maybe would not have been possible years back. I think in Europe, there is more of a sense of, folks, we just need to get going and do what we have to do. And you can see there's going to be probably more consolidation, I think more domestically within European countries. Cross-border is more complicated. in the Middle East, there is definitely a sense of, yes, there are opportunities right now, also for a series of idiosyncratic opportunities and what's happening in the Middle East. And then Asia, it lives through its own rhythm, dictated by Japan, by China, by India, by Australia. And therefore, they are all looking at opportunity for growth also coming from the US.
How much, we had a good, actually, earnings season for a lot of the banks, but how much do you worry about a credit cycle downturn?
We always worry. I mean, we are an institution of warriors. We have the warrior number one, warrior and warrior number one, who is the Jamie, and he pushes that sense onto all of us. We need to worry about everything. So, of course, you look at the credit cycle has been benign for so long. Credit spreads are at the tightest. Notwithstanding all these considerations. So do you think about it? Yes. Do we see an immediate sense there could be recession in the US? No, that's not.
How do you prepare for it, though?
We always stress every potential outcomes. Jamie wants us to be prepared for any outcome, whether it's higher rates, whether it's stagflation, whether it's inflation, whether it's geopolitical risks. As someone said recently, barring probably an asteroid hitting planet Earth, we try to be prepared for everything.
What makes you worried the most, given all of these potential shocks, risks, models that you play out?
I think I would say markets still tend to price perfection a little bit on everything. So that's a consideration that I have, that there is this sense that everything is going to go well, notwithstanding everything else. So that's a little bit of a worry that I do have.
But could we see a washout, like a big correction, or does the market automatically adjust itself?
Look, if you look at some of the geopolitical things that have taken place at the beginning of the year, starting with Venezuela, markets barely reacted. Now, to some of the latest news, there has been a little bit more of an activity, but I think markets have, clients have become more, they got their head around the volatility and they just don't overreact anymore.
Filippo, you have a new special advisory services team. So how are they prioritizing AI, geopolitics, and sustainability?
So they are prioritizing a series of services that we provide clients, not only those, also cyber, our Center for Geopolitics, the Directory Advisory Service, and so on and so forth. The idea is to provide our most important clients with access to the best intelligence that we have on some of these various sectors or topics, and provide them with those services.
Again, I mean, on AI, are you looking at it from, so we talked a little bit about valuations and some of the worries there, but do you talk about it also on how it could change macro economies at a productivity level? Absolutely.
You consider everything. So we are big users of AI. We have around 400 active AI cases that they're currently operating through the company as we speak. So we take from what we learn from our own lessons, what we learn from our clients, and we try to help clients around the world as they make decisions.
Filippo, thank you so much for joining us today.
Francine, thank you for having me.
That was Filippo Gori, co-head of global banking at JPMorgan. With that, I'm going to send it back to you in New York, Vani, and we'll have plenty more from Davos throughout the day. It's going to be busy.
It is, and we're going to be returning to you in just a little bit. Francine, thank you so much. Wonderful interview there. That was Francine Lacroix. Now to other top stories trending on the terminal this morning. U.S. Treasury Secretary Scott Bessent says President Donald Trump could announce his pick for the next Federal Reserve Chair as soon as next week. BlackRock's Rick Reeder and National Economic Council Director Kevin Hassett are among the frontrunners.
We have 4 fantastic candidates. It will be up to the president, and I would imagine that he will have an announcement maybe as early as next week.
Elon Musk's online brawl with Ryanair's CEO is dragging into a second week. The world's richest man has again floated the idea of buying the airline after clashing with Michael O'Leary. Musk posted a poll on X Monday asking if he should purchase Ryanair and, quote, restore Ryan as their rightful ruler. Michael O'Leary called Musk an idiot. And UK firms cut jobs at the fastest pace since 2020, and wage growth eased to its lowest in 3.5 years. Tax data show the number of employees on payrolls falling 43,000 in December. Unemployment, based on the ONS Labour Force survey, held at a near 5-year high of 5.1% in the 3 months through November. Back to our headlines now. President Trump taking a swipe at French President Macron for declining Trump's latest peace initiative.
Well, nobody wants him because he's going to be out of office very soon. So, that's all right. What I'll do is, if they feel like Costo, I'll put a 200% tariff on his wines and champagnes, and he'll join.
Joining us now in Brussels is Bloomberg's Oliver Crook. Oliver, give us the backstory. Why was President Trump so put out here?
Yeah, it's hard to sort of keep track with all the tariff threats that are flying around. The latest from President Trump is towards Emmanuel Macron, specifically to France, for a 200% tariff, basically on the French refusal to join the sort of Gaza peace board. Basically, they were saying that they did not have quite enough information at this point. They had to sort of decline, and that's a threat that we got from President Trump. We should also say there was some more activity in the relationship between the French and the American president, where Donald Trump, in what seems to be a sort of tradition now before his trips coming to Europe, he was posting screenshots of text messages he got from Mark Rutte and from the president of France, Emmanuel Macron. And I'll just read here what he put out. And this is apparently a text from Macron saying, "My friend, we are totally in line on Syria. We can do great things on Iran. I don't understand what you're doing with Greenland. Let's try to build great things. 1, I can set up a G7 meeting after Davos in Paris on Thursday afternoon. I can invite the Ukrainians, the Danish, the Syrians, the Russians in the margins. 2, let's have dinner together in Paris and talk on Thursday before you go back to the United States." So this is exactly what President Trump did last time he came for NATO back in June. He posted these sort of text messages that were sort of bizarre from Mark Rutte very sort of publicly. He did again posted a text message from Mark Rutte. But all this to say that there is a very sort of intense diplomatic effort, as embodied by that message from Emmanuel Macron, to get some one-on-one time with Donald Trump to try to de-escalate the Greenland situation, to try to build the forums of building understanding at the G7 level. We should also say, I think it's pretty interesting that Macron himself was suggesting including the Russians at the margins. I doubt that was really necessarily information that was meant for the public, that was meant for President Trump, which of course Trump posted publicly. But that's sort of the ambition and this sort of feeling going into this Davos meeting where Donald Trump is heading in. If you want to get what Donald Trump's feeling going into the meeting at Davos is, this is the other thing that he posted on Truth Social, which is a picture of him, J.D. Vance, and Marco Rubio, AI generated it seems, with Greenland and the American flag saying U.S. territory established 2026.
Yeah, so, Ollie, I mean, we obviously saw, and they were verified, texts from the French Prime Minister. But in general, how will European leaders approach negotiations this week? They have to be all on some sort of same page, right?
So I think they're going to try to get a feeling in the room and any kind of sort of ambitions that the Trump administration, any kind of possible off-ramp that there might be with Trump. We should say, Vonnie, in what we've heard over the last couple of weeks, it doesn't really seem that there is an off-ramp with Donald Trump on this issue of Greenland, but they're going to investigate that. Now, again, we may get this G7 meeting in Paris on Thursday afternoon. There is, of course, that emergency meeting by the European Council that has been convened here in Brussels on Thursday evening. And what we'll be watching for there, Vonnie, and what I think will be very interesting, is trying to see some of the differing views in terms of how the member states of the European Union want to go about this. As we know from the very beginning, Emmanuel Macron has been much more aggressive. He says we should go all in. We should really push back against the United States. We should use the strongest measures that the European Union has. We heard from Friedrich Merz, the Chancellor of Germany, who says, listen, let's keep slightly cooler heads. Let's go about this a little bit more slowly, because, of course, Germany is much more dependent on the export market in the United States. All of that being said, Vonnie, I think there is a dawning realization within Europe that basically yesterday it was about getting the trade balance right. Today it's about Greenland. Tomorrow it could be about anything. So the Europeans at a certain point will need to draw a line in the sand. We also heard from Scott Bessent speaking in Davos saying basically his advice to everybody is stay cool, keep calm, let the negotiation go on, and whatever you do, do not retaliate to the United States. But that is going to be the question before European leaders when they assemble here on Thursday evening.
Yeah, exactly. It's a tough one. Oliver, thank you so much. Bloomberg's chief European correspondent there, Oliver Crook. And you mentioned the Treasury Secretary Scott Bessent urging calm as tensions rise over President Trump's ambitions to take over Greenland. Let's have a listen to what he said.
Again, I would say this is the same kind of hysteria that we heard on April 2nd. There was a panic. And what I am urging everyone here to do is sit back, take a deep breath, and let things play out. As I said on April 2nd, the worst thing countries can do is escalate against the United States. Back then, only one country, China, escalated. We ended up in an unfortunate tit for tat in tariff raises. We ended up at 145, 125. Through President Trump's good relations with Party Chair Xi, we have managed to stabilize that relationship and given great certainty. And as far as your question about the additional tariffs, what President Trump is threatening on Greenland is very different than the other trade deals. So I would urge all countries to stick with their trade deals. We have agreed on them, and it does provide great certainty.
That was Treasury Secretary Scott Bessent speaking in Davos in the last few hours, and a lot for the market to digest there. Coming up, the US Justice Department is weighing a rollback of gun regulations. More on that and a look at what else is making headlines in your front page news. Next, this is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up, the Washington Post reporting the Justice Department is considering loosening gun regulations to bolster support from Second Amendment advocates. The changes could include easing restrictions on private gun sales and shipping firearms. The Post says efforts to placate gun rights groups comes as AG Pam Bondi faces criticism for not going far enough in easing firearms restrictions. Next up, the Wall Street Journal leading with Goldman Sachs and its top lawyer's Epstein problem. The extent of Catherine Ruemmler's relationship with Epstein has drawn scrutiny inside Goldman, where Ruemmler is general counsel and a top advisor to CEO David Solomon. Now, Solomon has expressed support for Ruemmler, saying she is an excellent general counsel. And finally, on the front page of the Financial Times, banks in Saudi Arabia borrowing internationally at their fastest pace ever as they rebalance their books after years fueling the kingdom's economy. The FT reports the kingdom now faces tightening liquidity after a decade of massive state spending and is looking for alternative sources of financing, particularly from abroad. All right, let's get to these markets because this is just one of the stunning moves today. It's indicative of what's going on in these markets. There's turbulence and there is just a bunch of unsettling things to traders out there. It all began really in Japan, where Sanae Takaichi proposed pausing the 8% sales tax on food items for 2 years. Now, that could add 5 trillion yen to the debt in Japan, and that sent investors fleeing sovereign debt in Japan. And we had this massive sell-off event, and that caused yields in Japan to rise. As you can see, the Japan 30-year yield is now at 387. It's up about 3 basis points, but earlier that move was about 10 basis points. It filtered into the United States, where you see the 10-year yield very close to 430. We haven't been beyond 420 since last summer, the end of last summer. And we also are seeing the same thing in the European session. I also want to point to gold above $4,700 an ounce as investors look for haven. Silver also at a record. A little bit of selling off in Bitcoin, and the VIX index is above 20. Coming up, we're going to get more from Treasury Secretary Bessent's press conference at Davos. This is Bloomberg. It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Markets on edge. Global bonds selling off after a meltdown in Japanese sovereign debt on Takaichi's election pitch. That and President Trump's tariff threats adding to market unease as world leaders gather in Davos. Plus, Treasury Secretary Bessent in Davos says the president could announce his Fed chair pick as soon as next week. So let's get to these market moves. We are off our extremes, but as you can see, we are still looking to a very much lower open. Nasdaq 100 futures pointing to an open of almost 2% lower. We were above that earlier, more than 2% of a decline expected at the open. It all started in Japan, where we saw yields absolutely skyrocket by 27 basis points in the session. So let's take a look at US yields, because there was obviously a knock-on effect. So massive curve steepening. Look at that 30-year yield up almost 10 basis points right now. That 10-year yield almost at 4.30. We were above 4.29 earlier. Just the two-year yield a little calmer, but it's still many basis points higher than it was at the close of trading on Friday. So that curve, about 70 basis points between the 2s and the 10s at the moment. You're seeing a run into safe havens as well, with gold and silver at records. Gold above $4,700 an ounce. The VIX is above 20, and the yen had a stunning move as well. It started the session very much weaker on the prospect of Takaichi's adding $5 trillion to Japan's debt with her pause on sales tax idea. But of course, also the tariff threats on European countries over Greenland is putting this market completely at ill ease. So this is what your market picture looks like right now, just the macro environment. We'll see if Bessent's comments can calm this market, or if they want to know exactly what he means by why they should stay calm. But for some individual movers now, let's get across to London and Chloe Melly. Chloe.
Good morning, Bonnie. We are seeing a wall of red this morning among those big US tech names, which is part of that global sell-off across equities, of course, due to Trump's tariff threats really spooking investors and those escalating tensions between the US and Europe over Greenland. And so we are seeing all of those really big names in the red this morning, and Western Digital in particular down more than 4% in pre-market trading. Moving on to miners, and there the picture is very different. It is actually all in the green, and that is because we have seen this rush towards safe havens from investors because of this uncertainty, because of those tensions. And so this is, of course, very beneficial for those miners. And so we are seeing, in particular, critical metals this morning up at more than 9%. And finally, Wrap Therapeutics is up massively this morning after the British drug maker GSK agreed to buy the company in a deal that is valued at $2.2 billion. And so we are seeing a huge move there for Wrap Therapeutics, more than 60% in pre-market trading.
Chloe, thank you so much. And I do want to bring you some lines now from Ursula von der Leyen. It is, in fact, what looks to be the European response to President Trump's threats. She says on the US trade pact that has already been agreed, quote, a deal is a deal. Then she goes on to talk about the Greenland response. She says it will be unflinching and united and also proportional. So Europe is suggesting a proportional response to President Trump's threat to increase tariffs on 8 European countries if a deal isn't reached by February 1st. We don't have details on what this proportional response would be, but she does go on to say that she is working on Greenland investment surge among European countries as well. So once again, we have a response from Ursula von der Leyen speaking at the World Economic Forum in Davos. The Greenland response from Europe will be unflinching, united and proportional. Treasury Secretary Scott Bessent then in Davos, signalling the race for Fed chair may be coming to an end very soon.
We have 4 fantastic candidates. It will be up to the president, and I would imagine that he will have an announcement maybe as early as next week.
Joining us from Washington is Bloomberg's Kasia Kimushinska. So, Kasia, the Treasury Secretary making some headlines this morning, many headlines, in fact. Give us some of the highlights.
U.S. Treasury Secretary Scott Bessent is doing what President Trump wants him to do, which is to try to calm down the markets. As you mentioned, there is a sell-off. It's hurting both U.S. stocks like the Magnificent Seven and U.S. Treasuries. And so Treasury Secretary Scott Bessent is trying to address exactly that, especially the sell-off in U.S. debt. So he said in Davos today that he hopes that the global leaders will de-escalate, that they will find a solution out of many conflicts, and also that investors should not overreact. So he compared the situation in the markets today to what happened in April of last year when President Trump announced global tariffs. Still, I think we have to see what Bessent tells Trump privately and whether he will manage to talk his own boss, President Trump, down, because so far the tone that is coming out of President Trump is very combative. We had a lot of areas of tension, not only Greenland, but also this peace port in Gaza, additional tariffs on 8 European countries, and then even more levies on just France. So I think investors are right to be concerned, and they have to wait to see what Trump says when he arrives in Davos, most likely tomorrow.
Yeah, I mean, that was not a very short market response back last April. I mean, that Liberation Day, turmoil in markets lasted several days, and it really just calmed down, after a lot of back and forth between the president and the Treasury Secretary as well, Kasia. This 200% champagne tariff, particularly against France, what does it tell us about the relationship with Macron and how that's developing? Because we know there have been texts since the president announced that he might do that.
Yeah, it's clear that Trump sees Macron as weak and as a good target to attack. We'll see whether the two continue to talk and what other leaders in Europe will manage to achieve during the Davos meetings. I think one thing that is clear is that there will be very little progress on Ukraine. Trump isn't interested in this issue at the moment at all. He is much more focused on Greenland and also on his domestic targets, such as affordability. It's most likely that tomorrow at Davos he will want to talk about affordable housing, perhaps lower rates on credit cards. Maybe he will mention the race for the new Fed chair. Very likely he will attack the current head of the Federal Reserve for keeping interest rates too high.
Well, and Kasia, we just got a response from Ursula von der Leyen, the European Commission president, to the threats that the president has been making. And she's basically saying, look, a deal is a deal when it comes to the deal that was made with Europe, and that there will be a response on Greenland, and it will be united, it will be unflinching, and it will be proportional. So, that's not going to please President Trump arriving in Davos, and he has to meet various parties, right, over Greenland. What will those rooms be like? What will he say to them, and what will the response be?
Yeah, so I think she is trying to keep all the door open here. So she's showing that Europe is ready to respond, but also eager to negotiate, right? I think this carrot that she has there is keeping the EU-US trade deal on, even as there is some opposition to that deal currently in Europe. But she's also saying, okay, if you impose those 10% tariffs on February 1st, we will retaliate. And of course, there are ways that Europe can hurt, especially some of the swing states here in the US, where voters will decide in November whether they want to re-elect Republicans or vote for Democrats. So I think Europe has some, carrots and sticks there, really, and we'll see how the talks tomorrow and perhaps beyond tomorrow go. President Trump often sets deadlines only to move them later on.
Kasia, thank you so much. That is Bloomberg's Kasia Klimaszinska in Washington. Now to other top stories trending on the terminal this morning. President Donald Trump flipping his position on the UK's plan to return sovereignty of the island Diego Garcia to Mauritius. He had previously supported the proposal. Trump cited the decision to justify his ambitions for the US to acquire Greenland, saying the UK giving away the island is an act of, quote, great stupidity. Elon Musk's online brawl with Ryanair's CEO dragging into a second week. The world's richest man has again floated the idea of buying the airline after clashing with Michael O'Leary. Musk posted a poll on X on Monday asking if he should purchase Ryanair and, quote, restore Ryan as their rightful ruler. O'Leary called Musk an idiot. And South Korea will hold off from disbursing the first $20 billion of its planned investments in the United States under the trade deal framework it agreed with Washington. Sources said that this would be until Seoul is confident that this will not have an adverse impact on the won. Coming up, an interview with Banque de France Governor Francois Villeroy. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Keep an eye on these markets today. There is turmoil in these markets. We have futures pointed very much lower, back down now, pointed 2% lower on the Nasdaq 100. It's the global bond market that is perhaps suffering the most, with Japanese 30-year yields up 27 basis points in the session, a massive sell-off which infected bond markets around the world that were already on edge, with President Trump threatening more tariffs on Europe, and a response now from Europe's Ursula von der Leyen saying that the Europe response will be proportional. So that's really causing some ruckus here in the bond market. Look at the 30-year yield at 4.93 practically. That's levels we haven't seen since last summer. The 2-10 spread is at 70 basis points. We have the VIX well above 20. Let's take a look at the yen, because that started the session very much weaker on the news that Sanae Takaichi was going to pause the 8% sales tax on food items for 2 years. Now, that would add $5 trillion to Japan's sovereign debt burden, and that really panicked investors. You saw the yen weaken significantly and then strengthen all of a sudden. Investors repatriating, perhaps, or the idea that they might be repatriating, also the safe haven flows, no doubt, playing into that strengthening as well. It was an almost one full big figure move. Let's head back to Davos, Switzerland now, though, where Bloomberg's Francine Lacroix is standing by. Francine.
Thank you so much, Vani. I'm delighted to be here in Davos to talk about everything that's going on. Of course, we have a big U.S. administration. I'm delighted to be joined by the Banque de France governor, Mr. Francois Villeroy de Galhau. Thank you so much for joining us, Governor. Look, there's a lot going on. You go in the Congress Center, you go along Promenade, and people are anxious. It's CEOs that are anxious. It's leaders that are anxious because of what's happening with the Trump administration in Greenland. How much do you worry about these extra tariffs on champagne? 200%, possibly.
So champagne, by the way, is an excellent French product, if I can use this opportunity. But more seriously, in this crisis, we should remain calm, and each of us should carry out his duty. So it means that it's up to political leaders to manage and hopefully solve political tensions, which are at the core of this Greenland crisis. And it's up to us central bankers to assess the economic consequences and possibly the monetary policy consequences of tariffs. We can discuss that.
But honestly,
I think we were not that bad in Europe in the last year, if you look at our collective reaction.
But, Governor, I have to say, I mean, most economists had said, look, we'd gone through the worst when it comes to tariffs and threat. If you have 200% on champagne or something else, but this is what we're looking at right now, could it change the trajectory for European monetary policy?
No, let us take perhaps a broader view on tariffs. So far, and there was Goldman Sachs analysis, for example, tariffs were paid by the U.S. economy, be it U.S. businesses and then U.S. consumers. Yeah. And Goldman Sachs figures are quite impressive. It's around 90%. And there was even a study published yesterday by the famous Institute of Kiel in Germany, Professor Hinz, which says 96%. So what we have to assess is the effects on activity and on inflation. On activity, tariffs are obviously bad news for everybody. But it's a bit through the direct effect. It's still more for trade uncertainty. And the problem is that, again, this crisis raises, again, trade uncertainty. So it's bad news for everybody again, including the US. On inflation, which is our core mandate, so far, and I said it 1 year ago, tariffs didn't have an effect on our inflation trajectory. As you are aware, we were very successful diminishing the inflation for, if we take Davos 1 year ago, we were 2.4, we are now at 1.9, so very close to target. We diminished interest rate from 3% to 2%. Yeah. So we should assess all the possible effects if there are additional tariffs. We don't know yet. Again, it's a political crisis, but there could be a limited direct inflationary effect. But there could be also an appreciation of the euro, which plays in the opposite direction, some downside effects on activity. So if I take the whole picture, I would say that probably the inflation on European inflation, I stress European inflation, I expect it to be muted.
What should the European response be?
On monetary policy, which is, again, our core business, we are in a good place, as Christine Lagarde stressed, but I stress once more that we should be agile and pragmatic, so look at data. On more general trade policies, this is not within my remit, but obviously we must find a political solution to this crisis.
Governor, you said it was fanciful to expect a rate hike this year. Is it still the case?
Barring a major external shock, I said, but I think it's still the case. Yeah. There are downside risks on inflation which remain at least as significant as the upside risks. There are upside risks also, but to mention some downside risks, I mentioned a possible appreciation of the euro, linked also to some attacks on the Fed independence, which are weakening the dollar. If you look also 1 year ago, the euro has strengthened which people probably did not expect in Davos in January 25. It's a sign of confidence in the euro. There are also the question of Chinese import, wage moderation. So there are many factors which could really dampen inflation, but we will see. We are, as you know, data-driven and meeting by meeting. These are not only words.
At this point, do you think it's fanciful to expect a rate cut this year?
I didn't say that.
That's why I'm asking.
And I don't say it again. We'll see. No, I'm not announcing it, but again, we are pragmatic. If I had to sum up, I would say that with 1 year hindsight, Europe has managed the situation rather well cyclically. Growth has been resilient in the euro area, 1.4%, more than expected. Interest rates cut, the euro appreciated. What we have to do now, as still more in this crisis, is to leverage on our economic assets, and we have significant ones, to increase our growth more structurally. This is about the Draghi report, and there were progress made, but not enough. Look at the 28th regime, look at the Saving and Investment Union, look at the Omnibus directives. But we need to act quicker, stronger, and probably clearer. À la Delors, if I may. It was a calendar, a mobilizing date, a comprehensive package. I hope it will come in the next month.
Do you think it will come? Because again, I know this is now for the time for Europe to act, but we've been saying it for quite some time. At the same time, if you look at geopolitics, there's just more shocks. So I don't know whether it's a distraction or focusing the minds.
Again, Europe has acted, not quickly enough, not strongly enough, but I mentioned some progress. And it's good on the cyclical side, not fast enough on the structural one. But again, if this difficult situation has one virtue, is to push Europe to accelerate what I call the three I's. Integrate the single market, invest better. This is the Saving and Investment Union, and innovate faster. This is simplification and omnibus. Okay. And I guess there is a growing political consensus about that. I can say there is a complete consensus around the table of the Governing Council.
Governor, going back to inflation, I mean, you're expecting actually inflation to run close to but below 2% for this year and I think next year. I mean, is it a danger that you're kind of slightly below, or is it not a problem?
You must look also for the forecast horizon, and in our forecast we are back at 2%. So we will judge again meeting by meeting if we are really around the 2% now for 8 months in a row since May. So this is a very good position again. If there were to be a more significant and a more lasting deviation, then we would adapt. But we are not there at present. Let us be pragmatic in this very polarized, and political world. You know, this is also the role of central banks to keep calm and focused on their duty.
Do you think we're importing?
If I may,
yes, of course.
Then we guarantee price stability and as much as possible financial stability, which is a significant contribution in this crisis. Financial stability, we should be really very focused because there are some risks.
Governor, I mean, central banks have always been there, right, to be pragmatic and to help. You mentioned central bank independence in the U.S. I mean, how much of this is a worry? The market hasn't really latched onto it. But this is a major anchor.
Most central bankers worldwide, including myself, express their support to Chair Powell. I won't repeat the statement, but it's loud and clear. There was also significant support in the U.S. So like many things, it's mainly a U.S. debate.
Are we importing deflation from China? Or do you see that as a possibility going forward?
Increasing imports from China with significant figures. If you take the last 6 months, we know there was an increase in volume of 11% of Chinese imports, with lower prices. So it's a factor which contributes to lower inflation. This is why I mentioned it among the downside risk on inflation.
And you also mentioned the de-anchoring, right, of inflation coming from the U.S.
Yes, but we are not. There are various factors. If you look at the U.S., there could be some de-anchoring, which runs to an increase of long-term rates. And this would be a very adverse situation linked to the attacks on the Fed. So I strongly hope the Fed independence will be preserved. In euro area, I see no de-anchoring of inflation expectations. Again, this belongs to the good place.
Again, you've warned that France is in a danger zone when it comes to the deficit. If it can't get its deficit within 5% of economic input, what will be done? I'm not going to ask you what can be done.
Here we have some good news since yesterday, because the Prime Minister announced a deficit at 5%, which is a significant reduction step. It will have to be followed by other steps in the following years, and we will probably have a budget. So these are the good news of yesterday. Now let us see precisely at the content and what will happen in the parliamentary debate. But I would say that in this cloudy sky here, there is a bit more light about French fiscal policy.
But are you worried about hedge funds? Are you worried about what could be the triggers for a possible sell-off in France?
But again, now there is a commitment by government and parliament to bring a deficit back to 5%, which is a positive sign towards financial stability. Now, the Banque de France published this morning its financial stability report, and we mentioned 4 risks very quickly: public debt, and not only in France, valuation of AR, cryptos, and non-banks and private credit. So on all this front, we should look everywhere with great caution. But again, on fiscal policy, there are rather good news from France in the last hours.
Monsieur de Galhau, what do you worry, actually, when it comes in general to financial stability across the world?
I worry about these 4 risks I just mentioned. And so we should keep very cautious on that. There is room for simplification on some banking rules in Europe, and we advocated that with the ECB and SSM, but we shouldn't go to deregulation. This would be a more dangerous situation.
Governor, thank you so much for joining us. Francois Villeroy de Galhau there, the governor of the Banque de France. With that, Vanya, I'm going to send it back to you in New York, and we'll have plenty more throughout the day here in Davos.
Excellent, Francine. Can't wait to hear some of those other interviews, and a fantastic interview there as well. Thank you for that. That's Francine Lacroix in Davos. I want to bring you some headlines from China's Vice Premier, who's also now speaking in Davos, He Feng, saying he wants support for free trade and economic globalization around the world, saying the world needs to return to the rules-based trade order. He Feng also saying China sees itself as a trade partner for everyone, not a rival. And he's also telling those in attendance that China never pursued a trade surplus, and China wants to grow its imports but wants other countries to benefit. Once again, China's Vice Premier He Feng urging a return to the rules-based trading system and urging free trade and economic globalization, saying China can be a trade partner for everybody, not a rival. Now we're going to take a look at what's ahead this week. Netflix reporting its 4th quarter earnings after the market closed today. President Trump, of course, will address the World Economic Forum at Davos on Wednesday. All eyes will be on that address. And then the BOJ announcing its rate decision on Friday. A lot could happen between now and then, with a 27 basis point move in the 30-year Japanese yield today alone. Let's take a look at the macro environment as we head into the first trading day after a long weekend in the United States, and a big reaction after a huge sell-off in Japan. We see futures pointed lower to the tune of 2% on the Nasdaq 100, 1.6% on the S&P. The bond universe is suffering today as well. We have yields right up to 4.93 on the 30-year. That 2-10 spread back at 70 basis points. We're at levels we haven't seen since last September. We have a flight to safe havens. Gold above $4,700 an ounce. Some real jitters in this market, in spite of Scott Bessent urging calm. That's it for Bloomberg Brief. Surveillance continues the conversation.